Did your kids live with you until they were in their 30s?
No, I had a very simple policy, and this was one of the advantages of having been in the military. When they graduated from high school, they were given 6 months, and they had to make one of three choices. They had to either go in the military, they had to get enrolled in college, or they had to earn money and pay rent. But they weren't going to live there for nothing forever.
So how much did you charge them?
I didn't charge them anything. They both left. Of course, my daughter punished me by finding the college the furthest away from home and the highest price that she could.
Yeah.
Yeah. And so that's how they punish you folks.
Yeah.
I mean, but yeah, you can't let them live at your house. It's not good for them. It's not good for you.
Yeah, I can imagine. I'm sure my son will be out of the house well before he is 35, I hope.
Well, yes. Yeah.
Which would be 33 more years.
Of course, the other thing about having them live there is that as you get older, they can take care of you.
Right. But
So.
there's a long gap, I hope, between still living at home and needing to be taken care of.
Well, and of course, a lot of today's youth, I wouldn't want them taking care of me at my old
No
age.
kidding.
It could be a shortened lifestyle.
When you hear these stats about how many kids or 24 to 35-year-old young adults are living at home, what does that make you kind of think about real estate? And I guess the ways that people are even investing in it, because there's a lot of people who might be renting houses. There's a lot of people who maybe think that there are buying houses. What's your take on that?
Well, I don't think it in terms of real estate. I think of it in terms of human capital. And there are some other things. For example, 60% of African American youth are unemployed. 1/3 of all African American men are in jail. I
don't think it's 1/3, but
it's pretty high. We have a huge number of people, college graduates. Somebody told me 54% of last year's college graduates don't have a job. That's a wasted talent. Somehow we failed to provide as that movie was failed to launch. We have failed to provide them an opportunity to move on with the world. And one of the aspects of America has always been that every generation lived better than the last, except it's not happening. So somewhere along the line, we've had a structural failure. And it's financial, it's social, it's educational, it's a lot of different things. But it will overall begin to affect the economics of society, because as you have, our population growth is falling. And if you have people who aren't working, aren't contributing to society, then eventually tax collections start to fall, and dependency continues to grow, and that's going to affect the economy.
You have some things that in some ways started to happen in Europe. I mean,
Exactly.
You look at Spain and Italy right now. I believe they have like 25% unemployment, and even higher for ages that young adult age.
Some places this is as high as 40% for people under 25.
Yeah.
Which is dangerous unemployment. You never want to have a 25-year-old unemployed, especially if they have access to gasoline, matches, and Coke bottles, because they start revolutions.
Yeah. With such simple things, you can go buy at the grocery store.
It's called a Molotov cocktail, Ben.
Yeah. So tell me, you did bring some points here about the real estate industry, because in spite of all these kids living at home, there certainly are a lot of different ways that people can continually invest in real estate, and maybe some that are good, and maybe somewhere, some investments maybe getting brought to the people that are kind of doomed. Is that a fair way to put it?
Well, I don't know if people are doomed. I tend to believe nobody's doomed. But there's one thing going on.
Because you're such a positive guy, Dennis.
Yeah, I think people screw up their own lives most of the time. There's something going on in the real estate market, and it's in the investment market, which I think could potentially be dangerous. You know the term REO, right, Ben?
Sure.
What does it mean?
Real estate owned by a bank, typically.
Right. These are houses that banks took in for foreclosure or whatever, and they've been on their balance sheet. Well, after the 2008 crash, a bunch of companies got formed to buy these REO homes from the banks and then put them out as rentals. I've found 7 of them so far. And of those 7, they have bought something like 60,000 homes. Now, that doesn't sound like much when you look at the whole housing stock of America, but almost all these 60,000 houses were bought in 10 to 12 markets. So that's enough houses over time that you could actually affect that market. For example, there was very little buying in Detroit, but there was a great deal of buying in Phoenix. There was very little buying in Seattle, but there was a great deal of buying in Dallas. And these were markets that had gotten squeezed. So So these funds have been buying up prices and renting them. Now, the whole concept has been that we'll rent these houses, get them all rented, then we'll restructure this company as a real estate investment trust. We'll sell it to the public, and the public will get a big dividend. About 6 months ago, however, the smart money that founded these companies started to exit. So there was a company in New York called Oak Schiff, which is a hedge fund. They had invested in one of these companies. They bailed out. They sold their interest. There was another company called Carrington, was founded by a big-time investment guy in Los Angeles by the name of Howard Marks. They pulled out. The rest of them have filed to go public, and one by one, they're pulling their public offerings because the market won't accept them. So let's look at what happened with this thing. Okay, the banks sold these companies their REOs. The banks financed these companies buying their own REOs. Now, so you had the same banks, basically criminal organizations, as I call them, that lent money to buy properties which was on their books to a bunch of people who were going to sell them in the future. I mean, is there any possibility there's a problem going to happen here?
Yeah, I mean, basically, they're just taking it off one side of a balance sheet, putting it on the other, aren't they?
Well, what they're doing is they're taking off the bank's balance sheet in an intermediary onto this fund, and then guess what? Where they're going to put the risk of this fund? They're going to put it in your pocket, in the consumer's pocket, in exchange for maybe a dividend. Okay, it might work. But if it's going to work, how come the insiders of all these companies are major shareholders on the offering? If it's so good, why are they getting out? And then the other thing is, if this is the smart money, if this is what smart money was doing in 2009, and smart money is going away, and you buy this thing, are you suddenly smarter than they are? So what people are doing is you're getting called in by the greed. They need the yield. Their things are going to yield 6-7%. They need the yield. So they're going to take on this risk, which they don't understand, and then they're going to get hosed at the end, and they're going to say, well, how did I get hosed? Well, you didn't understand the risk you took, and this was basically a made-up deal to help the banks and the big investment companies get rid of the risk that they had from real estate. So these are the same people who led you down the path. I mean, and now they're going to ban it. It's like having an experienced guide who takes you in the middle of a minefield and then leaves. That's exactly what they've done. They've led you back into the minefield, and now they're going to leave you to your fates.
It seems like that's now not as an investment advisor, but that's the way a lot of these investments go. You figure as a company would IPO or a company goes to sell, I mean, oftentimes the people who are involved most intricately know the most about it, and now they're ready to kind of get out of it. Right,
and so why would you do it? I mean, here's Gibb's iron law of investment. Nothing done on Wall Street is ever done for the investor's benefit.
Right.
And so if these people are selling this thing, you got to be careful that why are they selling it? What are they doing? Is this the right investment? Who is in the position to analyze 14,000 rental houses scattered over 7 different markets across the United States? I'm certainly not. And I do this every day, and I have no way of analyzing whether these things are being run properly, or are they slumlords?
You just look at Craigslist and you check out what each of those markets does, and how many bedrooms it has. Yeah, and, build an Excel spreadsheet, Dennis.
Exactly. And then we all know what happens to Excel spreadsheets. I mean, who has time to do this stuff? And
right.
This is you have to just have some general principles, and one of them is if smart money is exiting, don't get in their way and don't help them exit. And I mean the same people. Give you an idea of who this is. The same people, you probably remember J.P. Morgan taking a $7 billion loss on this hedge fund, on this risk guy they had in London called the London Whale. The people who made J.P. Morgan take that loss is a hedge fund, which strangely enough is headquartered at J.P. Morgan's building in New York. But anyway, they cost J.P. Morgan about $6 billion. They were in one of these things, and they're leaving. Now, I'm sorry. I don't want to be in the way of a truck like that leaving.
Right.
Okay. And so I just tell people, be careful of these things. You're going to hear a lot of hype about them in the next couple of months as they try and do these IPOs. I can't think of a single investor that I know who should be in one.
It would seem to me that as this, as you say, gets marketed, and we just have about a minute left, but as this gets marketed, and all the positive news is going through, real estate's up, housing market's doing fine. Even the stock market's back on its feet, right. But it could fall. this would seem like the perfect time if I was trying to sell something like this. This would be the perfect time to market it.
It is, but as Bernard Baruch observed years ago, you always buy your straw hats in the winter. Okay, summer hats you buy in the winter, and right now this is summertime for real estate. You don't want to be buying summer hats now because everybody's buying them.